Have you ever wondered, what is Bitcoin? Let's take a moment to delve into this intriguing topic. At its core, Bitcoin is a type of digital currency. It's a technological marvel created by an enigmatic figure known as Satoshi Nakamoto. The identity of Nakamoto remains shrouded in mystery, but his, her, or their contribution to the digital world is undeniably significant. Unlike traditional currencies that you can hold in your hand, Bitcoin exists only in the digital realm. It's a decentralized currency, meaning it isn't governed by any central bank or single administrator. Instead, transactions occur directly between users with no intermediary in sight. The purpose of Bitcoin? To offer a unique kind of financial freedom. It's designed to allow individuals to send or receive money across the internet, even to someone they don't know or don't trust. In essence, Bitcoin is digital money, created and held electronically. You might ask, what sets Bitcoin apart from traditional currencies? Well, the answer lies in a few fundamental aspects. Firstly, Bitcoin is decentralized. This means it's not governed by a central authority like a government or a bank. Instead, it's managed by a network of computers, known as nodes, spread across the globe. This unique structure allows for a level of freedom and autonomy that's quite unprecedented in the world of finance. Another defining characteristic of Bitcoin is its finite supply. There are only 21 million Bitcoins that will ever exist. This scarcity is hardwired into the Bitcoin algorithm and is a stark contrast to traditional currencies, which are often subject to inflation due to the possibility of unlimited printing by central banks. This scarcity, in theory, makes Bitcoin resistant to inflation and potentially a good store of value over time. Then there's the matter of anonymity. While Bitcoin transactions are public and can be traced through the blockchain, the identities of the parties involved are often concealed. This provides a level of privacy not often found in traditional banking systems. Speaking of the blockchain, this technology is at the heart of what makes Bitcoin truly unique. Simply put, a blockchain is a public ledger of all Bitcoin transactions that have ever taken place. It's maintained by the network of nodes and is constantly updated as new transactions occur. Each transaction is grouped into a block, and these blocks are linked together in a chain, hence the name blockchain. This technology ensures a high level of transparency and security, making it near impossible to double spend or counterfeit Bitcoin. So, to wrap up, Bitcoin is unlike any currency we've seen before. It's digital, decentralized, and finite. It offers a level of privacy while maintaining transparency through the use of blockchain technology. It's a fascinating blend of technology and economics that's challenging our traditional notions of money. So, Bitcoin's uniqueness lies in its digital, decentralized, and limited nature. Now, you might wonder, how are Bitcoins produced? Welcome to the world of Bitcoin mining. Let's imagine the Bitcoin network as a giant global competitive lottery. In this lottery, instead of buying tickets, miners use their computing power to solve complex mathematical problems. These problems are puzzles that can only be solved through a lot of guessing and checking, making it a race to see who can find the solution first. This computational race is what we refer to as Bitcoin mining. So, why would anyone want to participate in this computationally intensive lottery? Well, the winner of this lottery, the miner who solves the problem first, gets rewarded with a certain number of new Bitcoins. This is how new Bitcoins are introduced into the system, but the role of miners extends beyond just creating new Bitcoins. They also play a pivotal role in maintaining the integrity of the Bitcoin network. How, you ask? Well, each mathematical problem that miners are trying to solve is tied to a group of transactions known as a block. When a miner solves the problem, they add this block to the blockchain, which is a public ledger of all Bitcoin transactions. This process is what validates and records transactions on the Bitcoin network. Miners therefore serve a dual purpose. They introduce new Bitcoins into the system, and they ensure the authenticity of Bitcoin transactions. This dual role makes miners an integral part of the Bitcoin ecosystem. However, it's worth noting that the Bitcoin network is designed to produce a fixed number of Bitcoins every 10 minutes, regardless of how much computing power is invested in mining. This means that as more miners join the network, the difficulty of the problems increases, ensuring that the production rate of Bitcoins remains steady. In conclusion, Bitcoin mining is not just about creating new Bitcoins. It's a crucial process that ensures the smooth operation and security of the Bitcoin network. It's a race that rewards not just with new Bitcoins, but also with the satisfaction of keeping the Bitcoin network secure and efficient. Bitcoin mining, therefore, is the process of creating new Bitcoins and maintaining the integrity of the Bitcoin network. But why do people want Bitcoins? What drives the demand? These are questions often asked by those new to the world of cryptocurrency. The answers lie in several factors. Firstly, Bitcoin's potential for high returns is a massive draw for many. Since its inception, Bitcoin's value has seen explosive growth, turning early adopters into millionaires and billionaires. Although the market has seen its fair share of ups and downs, the overall trend of Bitcoin's value has been on an upward trajectory. This potential for profit attracts investors and traders looking to cash in on the cryptocurrency's volatility. Secondly, Bitcoin's use as a hedge against inflation is another significant factor driving its demand. Traditional currencies lose value over time due to inflation. Bitcoin, however, with its finite supply of 21 million coins, is immune to such devaluation. This scarcity and resistance to inflation make Bitcoin an attractive asset for those looking to preserve their wealth. Furthermore, Bitcoin's rising popularity among tech enthusiasts and libertarians also contributes to its demand. Tech enthusiasts appreciate the innovative technology behind Bitcoin, the blockchain, which offers transparency and decentralization. Libertarians, on the other hand, value Bitcoin for its potential to disrupt traditional financial systems and provide an alternative to government-controlled currency. Last but not least, speculation plays a considerable role in Bitcoin's demand and price volatility. Many purchase Bitcoin with the hope that its value will continue to increase, allowing them to sell it for a profit. This speculative buying can lead to dramatic price swings, creating a cycle of demand that further fuels the price volatility. In conclusion, the demand for Bitcoin is driven by various factors: its potential for high returns, its use as a hedge against inflation, its popularity among specific groups, and the role of speculation. Each of these aspects contributes to the allure of Bitcoin, making it an asset unlike any other in the financial world. The demand for Bitcoin is driven by its potential for profit, its use as a financial tool, and its appeal to certain ideologies. So, what might the future hold for Bitcoin prices? This is a question that many of us ponder given the cryptocurrency's historic volatility. It's not an easy question to answer, but let's delve into some factors that could potentially influence Bitcoin's future prices. Firstly, regulatory developments can have a significant impact. Governments around the world are grappling with how to regulate cryptocurrencies, and their decisions could either fuel Bitcoin's growth or stifle it. For instance, favorable regulations could make it easier for businesses to adopt Bitcoin, driving up its price. On the other hand, strict regulations or outright bans could curb demand, leading to a drop in price. Secondly, technological advancements are another key factor. Bitcoin's underlying technology, blockchain, is continually evolving, and these advancements could enhance Bitcoin's functionality, making it more attractive to users and potentially driving up its price. For example, improvements in transaction speed and security could make Bitcoin a more viable option for everyday transactions. Market sentiment is another critical element. As with any investment, the perception of Bitcoin's value can significantly affect its price. If people believe that Bitcoin will continue to grow and become more widely accepted, they're likely to invest, pushing the price up. Conversely, if people start to doubt Bitcoin's potential, they may sell off their holdings, causing the price to fall. However, it's crucial to remember that predicting Bitcoin prices involves a great deal of uncertainty. Bitcoin's history has been marked by dramatic price swings, and there's no guarantee this pattern won't continue. Investing in Bitcoin, like any investment, carries risk, and it's important to do your own research and consider your own risk tolerance before jumping in. While Bitcoin's future is uncertain, one thing is clear: Bitcoin has fundamentally changed the way we think about money. The future of Bitcoin's prices may be unknown, but the impact it's had on our perception of financial systems is undeniable. To sum up, Bitcoin is a revolutionary form of digital money. It's a peer-to-peer electronic cash system that operates without any central authority. Its uniqueness lies in its decentralization, the limited supply of 21 million Bitcoins, and the technology behind it, the blockchain. Delving into Bitcoin mining, we see it as a crucial process that secures the Bitcoin network and validates transactions, all while creating new Bitcoins. It's a complex system that balances supply and demand and fosters trust in the network. The demand for Bitcoin is driven by a variety of factors, including its potential as a hedge against inflation, its use as a medium of exchange, and its potential for high returns. However, predicting Bitcoin's future prices is a venture fraught with uncertainty. It's influenced by a myriad of factors that can change rapidly. Whether you're a potential investor, a curious observer, or a skeptic, understanding Bitcoin is key to navigating the digital currency landscape.